not only the wealthiest traders on the planet, but the most well-informed, the central banks, have bought more gold and silver over the last 2 years than at any time in central banking history, ever. So the people who know the playbook are loading up on it. That's one thing. And in terms of how does the average person do this, you pay yourself first. You become regimented. You buy something every couple of weeks when you get paid. I don't care if it's 1 ounce of silver, 1 ounce of gold, or whatever it may be. You have to start somewhere. You let the laws of compounding work for you instead of against you. Every 2 weeks, you will buy something. I don't care what it is. You'll buy something for yourself every 2 weeks. And it was the best gift my dad's ever given me. Honest to God. I mean, he taught me how to save. He taught me how to pay myself first. He taught me how to get out of the rat race. And he taught me the laws of compounding and how important they are to understand them. Um, because most of us, our whole lives, have the laws of compounding chasing us instead of us controlling it. And, going into debt is now like, a birthright. Whereas instead of trying to pay yourself first and to accumulate wealth, is something that's ignored. It should be a paramount. It should be the first class you take, a freshman in high school, is how to manage your finances and to build wealth. And like working out or dieting, if you don't start day one, you never get anywhere. And once you start day one, if you're not methodical in it, you never get anywhere. It's like if you ever worked out at a club, and then right after New Year's, the place is flooded with new people, and then by the end of January, there's nobody there anymore because they gave up on their methodology, on their commitment. Well, you have to stay committed and regimented. And for me, I have bought something every 2 weeks for the past 34 years. I have never missed a 2 week period. It was a promise I made my dad. That's how you win. You pay yourself first and you mitigate your variable rate debt in an environment where ultimately, I don't care what the Fed is talking about, ultimately, the market is stronger than the Fed and rates will go higher. So, what can the average person do? Start to pay off your debt and pay yourself first, and that's how you get ahead. And the thing about gold and silver is that it's not as easy to spend as it is if it's in a bank account with your Venmo or your Zelle or your cash card or your ATM or whatever. With gold and silver, you got to box it up and send it back or do whatever. So it lends itself to being a wonderful vehicle for savings. Pay yourself first. And I think that's the only way you ever get ahead, and be regimented about it and make it as important as exercise or taking vitamins or eating right, whatever it is. The suppressed price, especially in silver, has made it very difficult for exploration. And so, this is a deal where if we were to see the price take off, it might really spur more exploration and growth, but that takes time to find it and then to bring it to market and develop it, mine it, and all of those things. So, look, I think that if you look at your finances as a pyramid, and I'm bullish on the miners, I am, but they're also very volatile. And if you look at your assets in the form of a pyramid, this is what the Swiss have used for hundreds of years, where the base of your pyramid would be something like 60 or 70% of your assets. And to me, that would be paid for home or real estate, cash, precious metals, assets that you own outright, right? The wealthy people in the world, they own lots of assets, not so much cash, but assets. That's the base of your pyramid. The middle portion of your pyramid could be treasuries paying 5%. A little bit more risk right now, especially in the treasury market, but 6-month treasury paying 5%. Okay, I'm cool with that. Or utility stocks throwing off a return, a dividend. And then the top 10% is the home run, will be your cryptocurrency and your mining shares. And the theory works like this: if you lose everything on the top 10%, you lose it all. And so in a perfect world, yeah, you hit a home run on the top 10%, and the mining shares give you that type of potential, especially when you see the big funds move into gold and silver in that environment where it's really taking off. The top 10% percentage potential outpaces the bottom 90%. But the volatility makes it so you don't want to invert your pyramid. So I do think people should own some, but do not substitute physical gold for mining shares. They're cousins at best. They're not the same thing. I come from a world where here again, it doesn't have to be mutually exclusive. You don't have to be in the gold camp or the crypto camp. I think they're both speaking to the same issue, and that is of the problems with the dollar and with uh, the political and geopolitical landscape. But I think the difference between the two camps is that when I sell gold and silver, even though I will tell you silver to me is the investment of a generation, offers unbelievable potential, I don't own it myself for that reason. I own gold and silver because they are wealth. And so to me, it is more of an insurance defensive position, whereas crypto, it seems the mentality for most people is to get rich. You don't see gold go up to 65,000 and then fall down to 15,000. You don't see go above 2,100 either. But the point of it is, in terms of percentage gain and loss, that volatility is something that works against you unless you let it work for you. You could be a trader and play that volatility. If you're more of a long-term buy and hold, then take the profit off the table, keep your principal, put it into gold and silver, and now you win. If you're prepared to take advantage of something, well, you buy low and sell high, and that's what most people do the opposite of that. So yeah, you start selling high and either reallocating into something on the low side or putting it into something safe and stable to retain those profits that you had on the high side. And it's very simple yet very hard to do because we're all geniuses when things go the right way. And take a little bit of accountability and try to think of the big picture. How do you get ahead? And to me, you get ahead by taking your winnings, and at least some of them, and putting them off, out of the game, so that you can continue to ride the original investment, but that you got some gains over there that will keep you going if the game doesn't work out so well. Time compounds. You wake up one morning and you're not as young as you used to be. So let the it could be compounding even in the simple terms, every 2 weeks, every 2 weeks, every two, or think about lifting weights. You want to see how this works? Just do curls with one arm, not your other arm, and watch the laws of compounding work for your right arm instead of your left arm. And you'll see what the compounding of time and effort make. And I think it's an important thing, and people lose sight of that. But it's how I've gotten ahead. And I would tell anyone, uh, like I've hired people and told them this, and they'll come back to me 2 years later and say, "I love you, man. Thank you so much for making me do that. I can't believe what I put away." Well, it's because no one's ever told us how important that is, and that to me, it's more important than just about anything. You have to prepare for the future, and it's not always in a 401k or self-directed IRA. Take your own accountability and prepare outside the system. Everyone can afford 1 ounce of silver a month. Everyone can. If not, you're having a hard time feeding yourself. And 1 ounce of silver a month is better than nothing. And if you can buy 20 ounces a month, great. Or whatever that number is for you, that's how you get ahead. And you let the laws of compounding, of time, of interest, work for you instead of against you.